Investor, where we blow apart the stock market and the energy sector today and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis, here today with Keith Fitz-Gerald. He is chairman of the Fitz-Gerald Group. And you also publish some reports.
Chief investment strategist for the Money Map Report.
Money Map Report, you got to check it out. Anyway, we're talking today about crude oil. Crude oil is all the rage. Gas prices back about $3.56 a gallon, earliest in the year it's ever done that. Oil, not long ago, $75 a barrel for West Texas Intermediate crude. Iran fears and what have you stoked it up above 105. It's down about 104 later on in the afternoon on Tuesday. But you've had a nice run there of some more than 50% in the price of West Texas Intermediate crude. So how do you play this? How do you play the big pop in oil? Because you can be paying more at the pump. And that's what we brought you in for, was to talk a little bit about that. First pick, Cheney's Cherry, Halliburton. Halliburton's an oil services firm. Why do you like it?
Well, there's a couple things going on. Number one, we haven't even started with the shooting. We've got limited supply. We've got worldwide demand growing rapidly, despite what everybody says about conservation.
Shooting, you're talking about the war that's coming in Iran?
Possibly in Iran, yeah. I mean, there's a lot of places where the shooting could start, but Iran's the most likely where shooting's going to start. The reason I like Halliburton is that energy services and production exploration companies, particularly worldwide ones, are expanding roughly 3 times as fast as the actual old line traditional oil exploration companies.
Right.
So Halliburton I like in particular because you can see it's been beaten to smithereens. People hate this company right now.
Taking down to $30 a share in October.
Goodness.
It's gained a little bit. You got like the momentum recently. It's coming up $37. Still below the 200-day average, which is at $40 a share. So maybe you want to get in before the crowd does at Halliburton, right?
Well, here's the thing.
11 times earnings, right?
Everybody's talking, 11 times rear, 8 times forward-looking earnings. It's compelling to me because everybody's looking the other way.
And they're a fracker.
They are a fracker.
They're a fracker. They help companies get down and put down the water and the sand necessary. Also, here's an income play, but also a pretty good growth play lately.
Yep.
Kinder Morgan Partners. KMP, they operate pipelines, they get gas and oil and refined liquids where they need to go. Look at the stock. I mean, look at the MLP.
Boom.
$67 to $90 along the way. They still yield 5%. They must have been really paying something down here at $67.
Yes, they did. Yes,
so why would you buy it at the new highs?
Well, here's the thing, right? You're looking for stocks in an environment where we have one of financial repression. You want stocks that have bond-like characteristics and bonds that have stock-like characteristics. Kinder Morgan really has both. High income, consistent double-digit compound annual growth rate since the 90s. Consistent business model, no corporate jets, no stadiums named after them. I like the fact that it's a very, very simple business that's high cash flow. You put stuff in a pipe, you charge a toll for transporting, you take it out at the other end. It doesn't get any better than that.
If you like the whole sector, there's a thing called the Alerian Index. The AMLP is an ETF that holds a bunch of them, but you've got Sunoco and Plains that I own. I love them. I bought them in 08. Never sell them, I don't think. Refiners, beautiful site there. Why is it a beautiful site? Because they make the gasoline, man.
They make the gasoline that we all need.
We need these guys. There's one on fire now in Oregon, where you're from.
In my home state, that's right.
But you like, I'm sorry, we got Valero down here with a bad title. Valero right there. Valero and Tesoro are big refiners. The integrated majors like Chevron and Exxon, they're all Conoco. They refine their own stuff.
Yep.
Valero, they have a few gas stations, but why do you like them?
I like Valero because they're a play really on the crack spread itself. If they can get cheap oil and sell expensive gas, that's good for them. I like the fact that they have access to otherwise supply constricted areas. They can't move product to the Gulf. There's one of the few companies that can exploit that.
So they're down on the Gulf Coast predominantly, or they're on?
Well, they're moving. They're moving there. There's short-term opportunities. They want. It's a yield here. Excuse me. I'm looking at my notes here because I've been on the go all day today.
Yeah, no. Valero, the nice little range right here, about to bust out of it, perhaps 25 and change. You got TSO also racing ahead. Yep. Some of these alternative energy plays, I don't have the graphs up here, but Clean Energy Systems, CLNE, Westport Innovations, one of them does the gas stations with gas, and the other does the truck engines that run on natural gas. And they're up 60 and 70% since October 3rd. October 3rd, big significant time. I mean,
it was. I mean, this is one of the interesting things about markets, particularly when it comes to energy. There's a lot of people, if you get there, they say the sky is falling, the end of the world, this, that, and the other thing. If you're an investor and you think about this very logically, energy is one of the few products in the world that we will need consistently more of till the end of time. Doesn't matter whether it's alternative, doesn't matter whether it's gas, doesn't matter whether it's oil, even unfortunately nuclear energy. We're going to need more of it.
Well, yeah, so the picks are consistent. Halliburton helps them get it out of the ground.
Yep.
Valero refines it. And Kinder Morgan runs it around everywhere you need to go. Good stuff. Thanks a lot.
Appreciate you having me.